Very good morning from London. Welcome to the RANsquawk European morning briefing for today, Monday the 12th of December. Hope you've had a great weekend. Risk aversion is a dominant theme today. We have seen European equity markets trade down around 2% in the cash. Euro-dollar trading down over 100 pips in the session as the dollar index currently trades up around 0.75%. Therefore, WTI and Brent crude futures both trading down a buck on the session. Lots of focus then on a Moody's article this morning, noting that euro area sovereign ratings do remain under pressure. In their opinion, Moody's do not see anything really new coming out of the euro area summit following the digestion over the weekend from market participants, and they note that rating actions can take place as early as the first quarter of next year. Also not forgetting Standard & Poor's, after placing the sovereign ratings on watch negative across the Eurozone last week, they aim to wrap up their review as soon as possible. So we're looking out for any possible comments from both rating agencies, and Fitch also must be worth considering. So that's just weighing on appetite across the board. And we also had the release of the Chinese trade balance over the weekend, showing a jump in imports against the expected. So that's also weighing on the market sentiment, as financials and basic materials are the worst performing sectors in the equity markets. And also, as we move through the rest of the session, it's very quiet in terms of market data on the calendar, so we could see some further exacerbated moves as liquidity does remain very thin across most of the asset classes then. Looking towards the US session, it's very quiet, as already noted, in terms of data. However, there is some supply in terms of 3-year notes coming to the market, as also the tips purchases from the Fed in terms of Operation Twist, but lots of focus will be remaining on Europe and the sovereign debt crisis. Just a couple of things worth of noting for fixed income traders. We saw some interesting T-bill results. Firstly, out of Italy, the Italian 12-month T-bill yield coming below 6%, which is a key factor there. So selling the full 7 billion euros from Italy. So a strong T-bill auction there ahead of the BTP supply later on in the week. And also from the Netherlands, we saw some T-bill sales with the shorter dated T-bill for a 3.5-month maturity coming in with a negative yield of minus 0.007%. Just a couple of things worth of noting for fixed income as we go forward. But that's enough from me. Have yourselves a good rest of your trading session.